And this video is going to be, we're going to talk about the full breakdown if you are going to be a homeowner, if you are wanting to purchase a home, whether it's now, whether it's in the future. You buy a home, not only are you paying your mortgage payment, that's when you own the home, but you have to make an investment. It is an investment. And when you own a home or when you're buying a home, you are investing your money before you purchase the home, you are investing money during the home buying process, and you also are going to be investing money as a homeowner in the form of your monthly mortgage payments, and also in the form of like your maintenance and things that will come up as throughout your journey of you being a homeowner. What are the costs that you have to be aware of before you purchase a home? So let's say you are wanting to buy a home. What are the costs that you want to budget for if you want to buy a home, like I said, whether it's now or in the future? So first thing is you're going to want to budget for your down payment. That is going to be 100% dependent on your loan type, the down payment amount, like percentage. So your down payment. In addition to your down payment, you have your closing costs. So closing costs are basically, it's pretty much with every loan. Like let's say when you own a car, you're buying a car, but then you also have to pay the taxes, the insurance, the fees, all of those little things that they add in. So when you're buying a home, you're paying for your closing costs. So your closing costs are going to be your title fees, your insurance, your property taxes. Some of additional things that you are going to be paying out of pocket is going to be your appraisal, which is when they go out to inspect the property to see how much the property is worth in comparison to what the owner is selling it at. So your appraisal, they have your credit report. You're going to be paying for that. And you're also going to be paying for, there are things you are going to be paying for out of pocket, even if you get assistance. So let's say you get assistance. They may assist you with your down payment, your closing costs, all a portion. Still, there are things you as a homeowner are responsible for paying out of your pockets. So now let's talk about your mortgage payment. What are you paying? You're going to break it down. So you have your mortgage payment. Your mortgage payment there are 4 things that make up your mortgage payment. And we call it PITI. So your principal, which is going to be how much did you borrow from the bank? Your principal. I stands for interest. Interest is going to be, okay, so you borrowed $300,000 from the bank. The interest that your rate is 7%. Your interest, you're going to be paying a portion of that within your mortgage payment. Your property taxes is something you will be paying as well. Now, with your property taxes, you have the option to either pay it in full all at once, or you could factor that into your mortgage payment. The average person that I've ever done a loan for is factoring it into their mortgage payment. So that is going to be included in your mortgage payment, your property taxes. So I guess there's 5 things. So your mortgage insurance, it's not that everybody pays mortgage insurance, but there's certain stipulations that if you get either an FHA loan or you get a conventional loan and you don't put 20% down, you are going to be paying your mortgage insurance. So that is the I. And then I wouldn't say 5 things, but there's 2 I's. So there's your mortgage insurance, and then there's your homeowner's insurance. Homeowner's insurance is going to be your insurance for the home, the same as if you get a car, apartments, insurance in the event if there is a fire, if there is a natural disaster, if there is any theft, whatever your policy covers, that is what the insurance is there for. So let's talk about that. Let's talk about dive a little bit deeper into this. With your mortgage payment, you can, like I said, choose to have your property taxes paid separately. You can choose to pay your homeowner's insurance separately. The average person groups everything together, which will make your full mortgage payment. That could be 2,000, 4,000. It just depends on how much what your specific scenario is, but it is going to be a dollar amount. Now, the reason why I'm making this video is because in one of my videos I had someone comment, which was a very, very, very good comment. This person commented in the video. They said, what if your property taxes goes up? Okay, let's talk about that. So I made a video. I talked about how your mortgage payment will not go up. I wanted to make this video because I wanted to be a little bit more clear on what I was saying. So when you buy a home and you get your interest rate and you lock that interest rate in, that payment, meaning your principal interest portion of your mortgage payment, is not going to change. The only way it will change is if you do like a refinance. If you do a refinance, if you do a HELOC, anything that causes you to like redo the loan, where you have to either add on a second, or you have to refinance your loan, which causes you to have to choose another rate. You're starting the loan over. That is the only way that portion of your mortgage payment is going to increase. Principal, interest, mortgage insurance, for the most part, your principal, your interest, your mortgage insurance is not going to change. What makes your mortgage payment go up is when you have your homeowner's insurance. Your homeowner's insurance is subject to go up every year. Homeowner's insurance is going to increase. It's subject to increase. It may not, but it is subject to increase. It is highly likely that it will increase. Your property taxes will increase every year, because every year what they do, I can't remember the name of it, but they do, it's like an adjustment. They readjust. They basically look at the properties in your area, or assessment. They reassess the property taxes in your area, the property values in your area, and a lot of times that reassessment can cause an increase in your property taxes. So those two things are things that are subject to make your mortgage payment go up. Now, another very important tidbit I want to add on in this video. And the reason why I want to talk about it is because I see it on TikTok a lot. And also I've dealt with it a lot. So when you are purchasing a new build, a new construction property, a lot of people aren't aware of this, because when you go to the lenders there, I don't know if they don't want to inform them or what, but me personally, I would inform the people that I deal with that decide, okay, I want to go to a new build. I always tell them this because it's important. It makes a big difference. But anyways, if you are doing a new construction, when they do the property taxes, because when you first buy a home, they assess the property taxes on the property. When you purchase a new build, they are assessing the property taxes on property that on essentially land, because the home's not built at that point. It's not fully built. So they're assessing the property taxes based off of the land. So the land has little to no value at that point. So what people will see is that a year later, okay, you'll buy a home. The next year, maybe the next year after that, people will say, oh, my mortgage payment went up by $600, $700. When they reassess the property and it's no longer land, they reassess the property, and the property is a fully functioning house that's worth $300, $400, $500, how much ever, $100,000. When they reassess that property, they see, okay, well, it's no longer land. It's actually a property. It has a pool. It has these things. Now, because we reassessed it and the value is this what increased, now we're going to increase your property taxes. And that's the reason why your property tax bill is increased. When a person buys a home that's already established, it's not a new build, it's already like a built home, and you're not the first owner, that more than 9 times out of 10, the property tax is already assessed and it's accurate according to that specific situation that's dealing with that house. If there is an assessment of the next year, it's not like a huge difference. It's not like a huge difference as it would be if you buy a new build. So that's one thing I want to clear up, is that when you buy a new build, not I'm not discouraging anybody from doing that, but I really want you to understand that either you need to know that, have that money saved up and keep that in the back of your head, or even better, when you decide to go, when you work with that lender, ask the lender and say, okay, well, how much do you think on average, ask them about that. And then hopefully they'll be able to give you the information you need so you can make a decision on what you want to do. But anyways, that is the breakdown of the mortgage payment section of when you own a home. Okay, and the final part, the final thing I want to talk about in this video is basically while you're owning a home, what are you doing? What are you paying for? Okay, so you as a homeowner, you're in your home now, you're paying for your monthly mortgage payment every month. There's no deviation from that. There's no, that's just what you're doing now. So you're paying your full mortgage payment, and then if there's anything that happens with your house, your faucets go out, your tub is clogged up, your sink is clogged up, your roof is caved in, and these are things I'm giving you guys worst case scenarios, because this is the stuff that just doesn't happen. If you've done it, all the inspections and all the things. Oh, okay, so that's what I missed, the inspections earlier in the video is inspections. But anyways, you've done all your due diligence, your inspections, all of your certifications, all those things, you shouldn't really have too much of an issue. But I'm talking about just as you, like, from the point of you closing on your home until the home is paid off, you're going to be paying maintenance. Air conditioning goes out, you're paying for it. Carpet spills on the carpet, well, regardless, you're paying for it. But anything that happens with the house, there's no landlord. There's no person you can call and say, hey, John, my faucets went out, such and such happened. This thing happened, can you fix it? You are that person now that does that. So that is this portion is not as long as the other portions were, but basically when you are owning a home, you are responsible for everything. If anything happens, you're responsible. Now, in the event, if let's say, God forbid, if something happens to, your home, you don't have insurance, and something happens, your insurance doesn't cover it, you're responsible. If you didn't get a warranty and your warranty doesn't cover it, you're responsible. So those are things to keep in mind. I really hope this video was helpful. To the gentleman that had the question in the previous video, or one of the videos, I really hope that this answered your question. I hope that this brought some value to you. If it brought some value to you, like this video so that I know this is the type of video you guys like to watch, and I will continue to make content like this. And I hope you guys have a wonderful day. Thank you for tuning in. Let's keep making this a good year.